Greetings, members one and all of the Salivation Nation. Gold enters its safe haven status on today's news with the stock market. Let's explore! Yes, indeed, we saw a little bit of an uptick in gold prices today. Silver's still down slightly, and platinum and palladium are down as well. But it is encouraging to see gold kind of make a move in the other direction slightly here, and higher as traders take cues from a dollar rally and a global tech-led stock sell-off. And this comes to us from Market Watch. Very interesting indeed. You can see here the bulletin here. NASDAQ ends 4% lower as tech rout continues. Part of that is there's some disappointment that Tesla did not make it into the S&P. Gold futures reversed course to finish at their highest in nearly a week on Tuesday, with the Haven Metal finding support as global stocks sank, and as the U.S. dollar eased back a bit from its earlier highs. Continued U.S.-China tension, the upcoming U.S. presidential elections, the pandemic, and a currency dislocation are adding to reasons for gold buyers to add on bigger dips in prices, says George Garrow, managing director at RBC Wealth Management, in a daily note. President Donald Trump on Monday said he intends to end reliance on China once and for all, whether it's decoupling or putting in massive tariffs, like I've been doing already, he says. Garrow said he continues to expect silver to eventually climb to $30 an ounce, and for gold to climb back to $2,000 as more sellers rush to cash. December gold rose $8.90 or 0.5% to settle at $1,943.20 for the futures, after trading as low as $1,911.70. Prices for the most active contract, which saw a 2.1% decline last week, marked its highest finish since the 2nd of September, according to FactSet data. Metals traded on COMEX didn't post settlement prices on Monday due to the Labor Day holiday being observed in the U.S. December silver, meanwhile, added 28 cents or 1% at $26.99 an ounce after touching an earlier low at $25.98. And those are for the futures. Prices for the metal had traded lower in early dealings as concerns about lofty valuations for high-flying technology-related stocks, which had led to a rally in equities amid the COVID-19 pandemic, dragged most benchmark global stock market indexes lower. That may have prompted some investors to sell gold to cover losses in other assets. A downturn for stocks and geopolitical concerns may have also contributed to a rush to dollars, which had put earlier pressure on bullion. And that's just it. There's really three safe havens here: gold, silver, and the dollar. And maybe not necessarily in that order, but nonetheless, it just goes to show you the power of fiat, the power of what those dollars do, even though by design they are losing value each year. The dollar gained 0.7% to 93.36 on Tuesday, as measured by the ICE US dollar index, a measure of the buck against a half dozen other currencies. Though the index was down from today's high at 93.48. A rising dollar can make commodities priced in the currency more expensive for overseas investors. So from Jeff Wright from Gold Mining, he says that the long-term trend of higher gold and silver is still solid after a period of profit-taking. This is a light week of economic news, so people will focus on the U.S. dollar or indications of stimulus talks resume for catalysts for gold in the short term, says Jeff Wright, Executive Vice President of Gold Mining Inc. And he says that the long term is solid. Now he is from Gold Mining Inc., but I tell you what, with the stimulus package getting closer and closer to reality, it does make you wonder, because that's going to be more money printing and out there, which is going to add to deficit spending for the year. And obviously, that's going to balloon our debt. We can pretty much bet that $30 trillion is much closer to being around the corner, for sure, and with all this going on. But nonetheless, it is fascinating to read this, and it is somewhat of a slow news day, but I think that times like this is an indication of what we've seen in other slow news days as far as a movement in the metals prices. We look back here, we can see gold really is up only slightly, according to this information here, and that we're seeing on Kitco. And so what does that mean? Well, it means that gold is holding its own. And really, in a sense, silver is too, even though it's down slightly as well too. But being the more volatile of the two, silver moves more aggressively one way or the other, along with gold. But nonetheless, metals do act as that safe haven. And right now, gold is doing a little bit of that today. But these slow days are certainly an encouragement. At least things are stable, for the most part, considering what's going on. But there's a lot of factors that can come into play that can move one thing or another. We are essentially working in two different economies here. We have the economy of what is happening with commerce and with jobs and the like, and that is starting to improve. And then we have the economy of what's going on behind the scenes with the central bank, with some of these big entities that are in real trouble out there, especially with what the Federal Reserve has been doing even before the pandemic. And that should concern us all, especially when we take into account where the debt is and likely what's going to happen. But there is some promise, or some hope at least, that we may see some positive numbers for GDP come the third quarter, those numbers will be released right before the election. We shall see. Unemployment and those numbers hopefully will continue to improve, and we will start to see this recovery, as long as there is some hope for that the coronavirus is kind of on waning down. And right now, for the whole USA and even around the world, the numbers are starting to ebb a little bit for the coronavirus. But nonetheless, there are concerns about a vaccine from both sides of the political spectrum. But nonetheless, there is talk that it may be, announced by election day. And if that happens, that's going to boost the markets. If that really does happen, because that is, even though many of us have some doubts or some concerns about it, make no mistake, the markets will react to any positive news. But then you have other things as far as unrest after the election, which that's going to be subject of another video that I'll do. But make no mistake, gold and silver react to good and bad news. And when they go up because of bad news, that's because of the instability of the situation economically that could come from it. And right now, with a little bit of the news that we've been hearing, especially with the stock market, well, gold is acting inversely to that as well as to the dollar. So there you go. So fascinating indeed, and all the more reason why we hold precious metals as an insurance policy against this type of thing, against uncertainty. Because make no mistake, even though we're seeing some good signs in the economy, we are living in a time of economic uncertainty, for sure. And with a bloated deficit spending and an even more massive debt out there, it doesn't surprise any of us, and it just bolsters our resolve to accumulate, to become our own central banks when we hold gold and silver. So there you have it. Post your thoughts below. Would like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to, yes, that's right, to please rate, share, and then after that, comment. You don't have to do it in that particular order, but maybe it might help to do it just for the sake of just, one thing after another. And then subscribe if you haven't done that already. And if you have subscribed, stay subscribed. I'd appreciate that. All right. Multitude of gratitude.